This conference will now be recorded.
And there's the official voice to say so. And of course, the recording will go up on the diocesan website along with a copy of the charts. So if we can first go to the bishop for opening prayer and his update.
Okay, thank you very much, Alec, and thank you everyone who's joined us on the call today. Primarily, the call is about the assessment and the consultation around budgeting and finances. But also, I want to begin today following the prayer with a brief update on the COVID-19 situation. So let us begin today with prayer. Let us pray. Gracious and loving God, we give you praise and thanksgiving for the gift of a beautiful November day. We give thanks for the crispness and for the sun. We give thanks for your presence with us by the power of your Spirit. We give thanks especially for the leaders across our diocese and the parishes that we are called to serve, for the lay and clergy leaders, for the care that we take in exercising diligence moving forward, especially through these challenging times of COVID-19, especially today as we consider the financial situation within the life of the diocese and decisions that we will take moving forward. We ask you to be present with us today to strengthen us by the full measure of your Spirit. Show us the way that you would have us move forward. In Jesus' holy name we pray. Amen. Okay, just a little bit in the beginning around update. As I've said on previous calls, and I always say this every time and will continue to say it every time, to extend my deep thanks and appreciation to the clergy and lay leaders across the diocese for the work that you've been doing through this COVID-19 time. We went through the first wave. We saw the flattening of the curve through the summer and into the early fall, and now we are well and truly into the second wave, as was predicted of COVID-19. The question is going to be how dramatic will that wave be? The modeling right now is indicating that by mid-December, we could be seeing upwards in kind of almost a worst case scenario, 5,000 to 6,000 new cases per day. And that's going to eventually affect the province. There's hope that with continued diligence and the work that's happening across the board that we'll be able to keep those numbers down. But we are well and truly into the second wave. We have continued to meet. The bishops have been meeting every couple of weeks. The executive officers across the 7 dioceses of the ecclesiastical province of Ontario have been meeting weekly and have been looking at best practices, receiving advice from people, especially in the field of epidemiology, and getting advice locally from our health units moving forward. So with the second wave, we had a meeting this week where the bishops and executive officers both heard a presentation from one of our advisors on the current state of COVID-19, and particularly as it relates to us, because as you know, there's increasing pressure being placed on the province to make decisions. One of the things that was very clear to us at the outset of the meeting this week is that our situation now in the second wave is very different than the first wave, in that we have a lot more knowledge, we have a lot more evidence from which to make decisions, and that's been extremely helpful moving forward on this in terms of what we can do in order to be more surgical about how we approach this within all of our dioceses. The information that we receive shows that while the numbers are higher in our diocese across the 3 health units than they were in the first wave, they're certainly still within very manageable ranges. It's not that we're not in a situation such as Peel or in Toronto or in Ottawa, and where the situation is expanding seemingly exponentially, but there is still cause for a lot of concern and due diligence. The part that I the point that I raised in the meeting was the question around our protocols, because we've been trying to maintain consistent protocols across the 7 dioceses over this time. And how successful have they been? What do we have evidence? And one of the reply that we got back is that there's a question because there's not been a long enough time to test how effective our protocols have been. But what we're seeing so far is very encouraging, that we have not within any of our churches had any kind of outbreak, that there's been, there was only one situation that came up on the call. It was in the Diocese of Niagara, where somebody that was tested and had COVID had actually attended a worship service. And of course, with all the protocols in place, that virus didn't spread through the congregation. And that's very good news, because I like to look at it, if we're following diligently our guidelines and our protocols, that the point is, if somebody does arrive in our midst who is asymptomatic, but who is, as they say, shedding COVID, that our protocols will keep us safe. You can never guarantee these things 100%, and we still maintain the point that if there's any sense of feeling that you're at risk, or people within your parish, to encourage them not to attend the public worship, but to attend in the other ways that we've been able to do through online or prayer chains, or however else the different parishes have been doing that. But that was very good news for us. And I think maintaining diligence around our guidelines and protocols will continue to keep us as safe as we can reasonably expect to be moving into the future. You remember in one of the previous presentations we had a few months ago, that within this are what are referred to as the 3 C's: close contact, closed spaces, and crowded places. And avoiding those 3 C's are very important. To those have been added 2 extra ones: prolonged exposure and forceful exhalation. And when we talk about forceful exhalation, that becomes conversations around things like singing and mask wearing, those things, the difference between droplets and aerosols. And we had quite a discussion around that, and we're given a bit of a primer on how all of that works. But the advice that we're still receiving from the experts that we deal with is that this is an issue that we need to maintain close focus on. Mask wearing remains critical, and but so far, in terms of the Anglican Ecclesiastical Province and our 7 dioceses, it seems that our protocols are working well and holding. So, and I think that's important for us as decisions are being taken. And I know there's some conversation in the health units in our diocese as moving from green back into a yellow phase. How's that going to affect us? And I know the mayor of Toronto, for example, met with the Bishop of Toronto, ostensibly to ask people to stay home from church for a while. They're really concerned about what's happening in Toronto. But after a lengthy conversation around what protocols the diocese has in place to maintain safety, felt that you're doing all the things that need to be done in order to keep your people safe. So that was a positive conversation in a place where it's quite a hot spot. So I think regardless of what happens with us, we continue to maintain our protocols, we continue to move forward. The other thing that came up on the call was, as we move through Advent and into Christmas, this is going to be a particularly difficult time. And we all recognize that, you know, the want to be able to get together, to worship, to be present with each other during this time of the year, and moving into the holiday time when people are coming home from different places, students are returning home from school. That question came up on the call, but again, the advice that we've been receiving about maintaining an abundance of caution in how we develop our protocols and our guidelines, there was a great deal of confidence around being able to continue forward with that. So that was one. The other point that I would maintain, and this was on the last page of the presentation, the importance of continuing to be cautious, but those advising us tell us you have to continue to be prepared that this is still going to be the long haul. That you know, they feel that it will be Christmas next year before we can probably say we're back to some kind of normal. And that has to do, we're hearing about vaccines, but vaccines, the testing, the rollout, who gets them, all of that, those raise a whole series of different questions. But we're in this for the long haul. And the problem that was highlighted for us is that there's a lot of fatigue. There's fatigue in the churches, there's fatigue in the society generally around what we have to do. And when there's fatigue, that's a dangerous situation. Just worn out from having to do this since March of this year. And that was something that we were pointing out, acknowledge that, but that this is where we really need to be vigilant moving forward. So I thought it was a very positive meeting that we had, and good advice. We're still in the midst of this, and again, it's so good to be able to be back in the parishes, and all the parishes that I've been in since we reopened in September. The diligence that is being paid to making sure that our people are safe when they come, the distancing, the contact tracing, the sanitation requirements, all of those things. I'm just absolutely blown away by the hard work that everyone has done, and just to encourage you to keep at it, and we continue to gather as we can and give thanks for the faith that sustains us in times of hope and in times of challenge. So that was just a brief update on that. We will be looking at our guidelines. There are some adjustments that we will be making to them, and then you'll be advised of those moving forward. So anyway, that's all I wanted to talk about in terms of COVID, and I'll turn it over to Alec, and he can carry on with the bulk of the presentation. And I think there's Q&A at the end. If you have any questions about that, please feel free to ask. Thank you.
Thank you, Bishop. So today there is a ton of information, and hopefully everybody is in the mood for numbers and things that reflect numbers. But there's two parts to this, in the sense of, when one looks at it, there is the layer of it that is the details and the numbers, and then there is what you take from that as you look above it, and what the numbers tell you, what the trends tell you, and most importantly, what you do about things as you read into those. So we're going to do a quick update on where the diocesan position is at the end of September. And of course, we do things on a quarterly basis. And so this is third quarter results. We'll then take a look at the diocesan budget for 2021, and then work through a fair bit of information around financial planning guidance for churches for next year. And then we'll have Q&A and then close. So just a quick summary to level set a little bit. So the diocesan budget, as you can see, is just over $1.6 million. And that money, obviously the bulk of that, just over 3/4, comes from common mission and ministry. Fees and donations account for about 17, and investment for the other, income on diocesan pieces for the other 6. So that is where the $1.6 million of income that we show comes from. As we talked last year, we restructured how we report in order to make it more fit with how people look at things and how we actually work things, and ended with a narrative budget type structure. So if you start up at the top, the bishop's office, about 13%, business, finance, and administration, about 35%, communications, 6%, governance, 3%, clergy support and development, about 5%, lay support and development, about 1%, parish support and development, 7%, ministry program support and development, 9%, and then 21%, which goes beyond our borders, and that's mostly, of course, the national church, the provincial church, and pieces like that. So that kind of breaks down how that $1.6 million gets spent. So when we look at the end of September, so with 9 months under our belt, the revenue is basically flat to budget, and our expenses are slightly below budget by about $25,000, which is our surplus. Now, this does not include anything to do with SUS or the church pandemic support funds. We've put all of those things below the line, so we're comparing our budget and actuals. We're comparing apples to apples. If you look at where the puts and takes are, at the end of September on the diocesan budget, it is basically flat for revenue. But inside the expenses, there are some areas that have gone up as we've, so areas like software, hardware, and services. And part of that is the investments we've made in our systems to drive some efficiency, but also to respond to COVID with equipment and software for the things that we've shifted gears on. Our line of credit has been slightly higher, so there's slightly higher interest there. One of the things that our audit firm recommended last year was an adjustment to our amortization. And while that's not cash money, that's in a sense paper money on the books. But as we amortize things that are on the balance sheet, that expense went up because the adjustments were made after the budget was set. The archives move was also approved after the budget. There's about $20,000 of expenses there, and that's the actual moving and lease costs. Legal and HR, of course, we deal with things as they come. Most of them are confidential matters, but basically paying on those fronts, we're up about $18,000. And then audit and financial services, again, we've used some of our resources to help guide around a lot of these issues and things like pandemic with the SUS and some other things to get expert advice. There's also areas that have come in under. Obviously, there's been limited amount of travel. Until recently, the bishop hadn't been visiting parishes. There's been no meetings, etc. So we're down about $24,000 there. Our office expenses, about $10K. Synod, there's 19 that was in the budget to this point for Synod. Parish support down by about $20,000. Again, those things aren't being put in place. A lot of that around programs like stewardship and congregational development, where some of those things weren't spent yet. Clergy support and development, and at this point for much of the year, things had slowed again because of the pandemic and because we haven't had postulants and students in the pipeline. Lay support and development, again, the pandemic hit there, and then just general programs, again, all reflecting how things have slowed down and had to adjust during the pandemic. So net, we're down about $25K, and that basically flows to the bottom line. So each quarter, we also then look at what we call the forecast. And so what we do is we take the actuals, in this case, for the first 9 months, and then we look at the budget for the remaining 3 months and adjust for things that we know. And so we then come up with our forecast for the end of the year, and we call it the September view forecast. And so the September view, as you can see, income basically just a slight touch off, expenses up a little bit, and as a result, we will run about a $20,000 deficit. Again, looking at where those things come from, most of the same things we have already talked about that carry on to the end of the year. We do have some legal matters that will be paid over the fourth quarter, and that's where that increase comes from. That is a confidential matter, so I can't talk to it in great detail. It's one that was not optional, and it's one that will be a one-time impact that will all be accrued this year, and there'll be nothing will carry forward to next year. And of course, similar reductions as we had talked previously, travel down, office expenses, the full lack of not having a synod, and then the other lines are pretty much as they were in the previous piece. So we're looking at about a $21,000 deficit. And again, that does not factor any SUS money into this. If we look at SUS, Canadian Emergency Wage Subsidy, some call it CEWS, we grew up calling it SUS. It's generated from payroll. It's generated based upon the definitions and upon the factors, and the program has changed, but the subsidy that is generated from church payrolls, from the payrolls that are billed to churches each month, the subsidy that's created is credited back to the churches, again, directly on their accounts. The money that is generated from the diocesan payroll, and there's 8 of us on that, is credited to the Pandemic Church Support Fund. And that money has been set aside to do work for churches through that. To date, it's been used really for 3 things. Insurance interest forgiveness. If you recall, back in March, we froze insurance, the interest on insurance, so that churches carrying that through, you won't be paying insurance interest. We provided cleaning and disinfecting starter kits, and then there's been the online worship tech grants. And so the money that those things, and that's around $15,000 between those 3 items, and so that's been taken from that fund. Our expectation is right now, sorry, there is about $85,000 is what we view as available. We will carry that over at the end of the year. So whatever is not spent this year won't be absorbed into the general year end. That will be taken to the balance sheet as a restricted fund. And the Pandemic Financial Response Team, who's put together a program that council had reviewed and now working through with the actual results, the PFRT will make recommendations to Senate Council on, how the funds that remain should be utilized, and whether those are done in the case of some churches where criteria have been met, providing some financial support for some that are the worst off. There's a variety of criteria that have been worked through. So that money will continue. So the money that is generated from the diocesan wage subsidy does not go to the diocesan budget. It goes into this special fund. One of the things that you always look at from a diocesan financial side is where the receivables from parishes sit. So each month we bill payroll, we bill CMM. Once a year we bill insurance, and then other bits and pieces. And then the receivable accounts reflect how much churches owe the diocese at a given point. And of course, in theory, and according to the canon, at the end of every month, that should be 0. But of course, we know that things don't always work that way. And at different points, we have had differing amounts of challenges. So if this is just a 10-year trend chart that looks at, to the end of 2019, how much at the end of every year churches have owed the diocese. And as you can see, it's been as high as about $600,000 and came down to about $300,000. There's also been the programs we put together on church viability, where some churches have had their receivables converted into loans. And so that is that lower. I've drawn that vertical line there because, of course, all those previous ones are year-end numbers. And churches generally have had a flow of income at the end of the year, and the receivables always go down at the end of the year. But what I wanted to show was just how this has gone this year. So of course, in first quarter, we bill insurance. It's about $250,000, and that causes things to bump up. As you can see, the receivables churches have been basically tracking well in terms of this year's expenses, and that's basically sitting where it was at the end of last year, and that's what Sue's applied to it. The other reflection of that we track is how much money each month comes in from churches. And again, that's payroll payments, CMM payments, insurance payments, and miscellaneous. So as you can see, the darker line, I guess that got lost in the translation, but that dark line has a lot less bumps to it. It's fairly flat, sits somewhere around $400,000 a month. in 2019. In 2020, that number has been up and down, as you can see. And of course, that's once March hit, we saw the impact of the pandemic. The other thing that's of course impacted this is what's been credited to church accounts on the wage subsidy. And so those little indicators underneath are the CEWS ones. They tell you how much each month has come in to the parish's credit from that subsidy. So what you can see out of this, and here's the key message, in 2019 to the end of September, there was $3.5 million received from churches. And that again covers payroll, CMM, and insurance for the most part. In 2020, the number was 3.2 million without the wage subsidy. When you add the wage subsidy, it's just under 3.7 million. So year over year, we've actually received a little bit more back in, and the receivables are down slightly as a result. One of the effects of that is we can then reduce the amount that we carry on our line of credit. So a couple of quick updates around the wage subsidy. The total that we calculate each month, and so all of the sheets that each church fills out each month on their income, comparing it to the prior year. If you look at the period from March to the end of September, church income is down $578,000. However, in total, we've received $592,000 from the federal government under the wage subsidy program. So we've actually in total received slightly more than the income reduction. Of that 592, 487 flowed immediately out to parishes. The balance was reflecting to the diocesan staff, and that's gone to the church pandemic support fund. I will point out we are about to submit our October data. There's still a few churches that have not yet sent in their sheet for October. It is as it is every month on the diocesan website. And basically going forward, this program will continue until June of 2021. So each month until the feds change the program again, by the 15th of each month, we need that data back in from you. If you're not in, then we'll eventually have to just submit without, because we need to get the money in so that we can credit it on the next month's payroll invoices. So if your church hasn't done its one for October, please get the form off the website and submit. This just looks a little bit in detail and we do a fair bit of analysis around the data and what it's telling us. This just looks each month at three things. How much the income is down, and that's that blue line, the blue bar that extends underneath. How much CEWS in total has come in, that's the green bar, and how much is actually of that subsidy has gone to churches. And that's the, I don't know what that is, that wine colored, rusty colored bar that sits on the right-hand side. And that goes by month. You can see March, April. In May, we did not qualify. So you can see each month as we've gone, how much we received, how much it was down. This looks at each point, each dot on this chart is a church or a parish, depending on how the reporting is done. And so this looks at the totals for the changes in income over the March to September period. And it's always hard to talk about averages because there's no average church, right? Each church has its own situation. Each church has its own financials. Each church has its own people, giving patterns, mission that they do. And there's a lot of things that are different about every church. So it's hard when you put them all and make everybody just a dot. but from a data understanding, the average decrease for those from March to September, the average decrease across all churches has been just under $11,000. And one of the things that we like to apply as well as average is median. So average simply takes and says, if I've got 10 things and I take the total of how much they all added up to, divide them by 10, and that's the average. The median is another way to develop understanding around it. The median says, where's the line where half are above and half are below? And so that's what that solid red line is. It's the median. So it says that half of the churches are above the median decrease, which is just over $8,000, and half are below that. And you can see the distribution from there. The dotted line is average, the solid line is median. This just looks at the same information, but instead of raw dollars, it looks at it from a percentage basis. And as you can see, the average decrease is 23% and the median is 20%. And again, that could be 20% of a church that has income of $20,000 or a church that has income of $600,000. It simply reflects across the piece as a percentage. But of course, we then factor the wage subsidy in to look at how the net effect is. So this looks at the same data, but now with the CEWS payment factored into the revenue loss. So each dot then reflects the church's change in income, but then adding in the wage subsidy. So now the average has gone to $1,300 of lost total net income, and the median darn close to it at 1,085. Again, variability all over the place, but that gives you the average and the median. And this looks at it from a percentage basis. And again, hard to draw too many, but it does give you an idea of distribution. The other thing that we've been trying to keep a watch on is where bank accounts, where cash liquidity is going. And what we've seen is since we started collecting that data, the churches are actually now holding, somewhere around another 20-25% above what they were earlier in the pandemic. So church bank accounts have gone up, and so there actually is more liquidity, more cash sitting in churches. So with that as a backdrop, wanted to change gears. We've talked about what the position is at the end of September, and now looking at how do we now put that into context and start to drive a 2021 budget. Budgets are always interesting things. This year, of course, as you all know, as you look at your parish budgets, are even more challenging. And so just a reflection again on what a budget is. And so while a budget is numbers and a budget is a management tool, but the budget also reflects, it's the guide to what God is calling us to do. The decisions we make around what we spend money on, how we do that, what supported the ministries that result. It's a reminder, and often as times have been tough here, we get focused on the things that aren't, and we sometimes forget that there are abundances, and we forget that we have things that are, and that while things may be different, there are many things we can do, as well as the things that we can't do right now. And the same applies to us from an approach to the budget. At the same time, we drive this to be transparent, so that there's clarity and openness, that there's comprehensive, that we factor things in, that we're fiscally responsible. We have always, for the last number of years, the last 10 years or so, our mandate has been a balanced income and expenditure. So that's balancing it out so that we match the two. And then recognizing the challenges that exist at the diocesan level, at the national level, at the parish and the congregation level. But again, part of that being, no one sets out to build a project, and in the case of St. Luke, building a tower, but you don't first sit down and work out the cost, and don't start things that you can't complete. So here's a few of the factors that we've used to plan into the budget. Some of this will go into more detail in the parish guidelines, but obviously for all of us, the pandemic is a huge unknown and a huge variable. Don't know if churches are going to be closed again next year. Don't know what the impact will be in terms of ministry, in terms of programs, in terms of giving and financial stewardship. We don't know where a lot of those things will sit as a result. We don't know some areas we may not be able to spend money in or invest money in. What we do know is that our policy has always been to use the prior year's inflation rate to adjust in the upcoming year. So to put that into plain English, we use the data from StatsCan from January of 2020 that reflects 2019 to budget for the inflation rate for 2021. And that's always been a bit, if you will, out of sync, but it's served well. The same thing will apply when we talk about stipend grids, that we use that data. We're using the specific data, by the way, for the province of Ontario. StatsCan does present the consumer price index for the province of Ontario. For next year, we will be using 2.1. 2021 will be a synod year. We should have had a synod this year, and as we all know, that was put into abeyance because of the pandemic. We know we will need to have one in 2021. We're just not clear on what the model for that might be, whether that will be a normal, 200 odd people coming together in one place, which would have, assumes that the vaccine is out there and the pandemic is well under control, or whether it will be a hybrid model where we are in regionals tied together on the net, or whether it's at a far end with a whole lot of individuals and churches tapped in purely online. Difficult to say right now. We are planning for a full event in the event that can happen, but the Synod Planning Committee under the co-chairs of Audrey Delisney and Michael Reed are working through the planning for all three different models. But we've planned for financially to be able to deal with the most expensive. We know that the CMM rate is flat. That's specified, can only be changed by synod. That has not changed in many years. And that we also know that we expect that the total dollars will also be flat. Our general synod proportional gift, a number of years ago, we adjusted that to 20%, and the budget planning factor that was approved by council was to hold that at 20%. I said on here that benefit changes were not available for the National Pension Office. However, as I also mentioned, things continue to be fluid. So just over an hour ago, I got those factors in, and I'll talk to those in the parish guidance side. But they, as far as it's reflecting on diocesan staff, don't expect them to have an impact outside of what we planned. Our lease costs remain flat. And of course, our lease is all in. So we pay our landlord for both the rental space, but for utilities and the whole piece on top of that. It is up a little because of the archive space moving from the remote location and moving it in here back in the first part of the year. Most program spending is forecasted, therefore, to remain basically flat year over year. And that finally, SUES is budget neutral as we come in the year. As I said, we're going to take that to the balance sheet, or a restricted fund, and then it'll be neutral as we leave the year. So I mentioned we expect our income to be flat, but as far as church support and CMM goes, the Pandemic Church Support Fund will be there to help support churches. That the details of that to be sorted through. We are factoring in the cost of living, that 2.1, and benefit changes. We know of a few things that will be incremental costs this year over 2020. I mentioned synod. There's also planned to be a provincial synod, and for that we generate the cost for our delegates to go, and the travel and living is associated with that. And again, that assumes that there will be a face-to-face provincial synod. There's things I mentioned, like the archive space is the lease for that is net a little bit higher, which was approved as part of that move. So there's those known things. There's the ongoing work we're doing to reduce core expenses, and we continue to look and drive efficiencies. We continue to invest in things that will help bring our expenses down, our capacity up, and to be able to provide new capabilities. As I mentioned, we're holding program spending at the 2020 level. However, we've also got the new ministry fund, which can be used under the guidance that's been put in place to provide support for new ministries. So that while the program funding will be flat year over year, there is funding available to help new ministries. And then the other approach to this is that we know things are going to change. We know as the year unfolds, there'll be more things to surprise us, some positively, some not so positively. And so Synod Council, as we go through, will adjust, and we'll look at, as each view comes through, that council will adjust, and as spending may be required in an area, or required to be reduced, or an opportunity to reduce, council will continue to adjust. So basically, the numbers remain flat, revenue at 1630, and therefore expenses at 1630. And so these are the major areas you saw in that pie chart at the beginning. The bishop's office going up slightly, cost of living, and he will start to travel again as he comes to visit all our churches. The business, finance, and admin area, we are targeting to hold flat. We will absorb the cost of living and the lease increase from the archives, and basically absorb those by infrastructure and services reductions, services we purchase. Communications will go up slightly by cost of. Governance, we have a synod in there, so that will go up slightly. Sorry, about 25K. Clergy support and development, previously known as T&D, will go up this year somewhat because we have a student postulant potentially in the pipeline. Lay support and development, basically flat. Parish support and development, this is one where we had the area where we had the legal and HR costs. So we will be, that's a one-time thing. So you see that comes down and back into the run rate level. Ministry and program support and development holding flat, and then slight increase beyond our borders. And so basically the combination of all of those things is that we would come in with a balanced budget versus the 21,000 deficit coming out of the previous year. And by the way, $21,000 on 1.6 million, $21,000 for any of us or our churches is a great deal, but it's 1.6 million. Of course, every dollar is important, but from a planning and perspective and accuracy, $21,000 is, we want it to be zero, but it's within an acceptable range. So Synod Council will meet next week, and there'll be a motion to approve that budget. It continues to be every day with us, a management focus within the diocesan leadership. It's the quarterly forecast and review cycle, so we adjust as appropriate. And of course, council will continue to oversee that each quarter, more often if things change materially in between. And then we'll continue these sessions. So as things continue to change, and as updates are available, we'll read them out so you folks know where we're at. So building from there, wanted to then focus on giving you some guidance as your churches now plan their budgets for next year. And again, many of the same things apply to the churches. There's a ton of uncertainty in a number of areas. There are things that are going to happen we know that we can't change. There are things that we don't know about. We don't know what we don't know. But what I want to do here is give you as much guidance as we have today. And as I'll speak again at the end, this continues to evolve as we get more information, but I'm going to give you what we have today and highlight where those are preliminary pieces. So 3 areas that I'm going to focus in to help you as you look at next year at the church level. One is the cost of clerical services, stipend, housing, benefits, mileage. The second area is around building. And of course, the one that we speak to from the diocesan end is insurance. And then finally, the things that are generated from the diocese, the income from the investment fund, and of course, CMM. So we manage and govern our stipend grids, whether it's the stipend grid for clergy or whether it's the staff salary grid. That is canonically based, and that's how we manage this through. That basically what we do each year is take the StatsCan CPI and the grid moves. And so all of the numbers on the grid will move up by 2.1%. In addition, clergy each year, they moved on the vertical axis, they moved to the right. And so that typically averages about 1.2% per year. So that means that for clergy that are still moving on the grid, it'll be about a 3.3% increase. Again, there's some differences at different spots in the grid. It may also change if in agreement with the wardens and the priest, they move on the vertical component. So that is minimum, mid, high, and top. And of course, there's room there for clergy to move up and down, to move up. One of the things is that you cannot pay less than the stipend that's on the grid. And generally, decreases don't apply unless they've been approved by the bishop. So what this will give you, the actual grid will be approved by council on Tuesday, and I will ship that out in the week or two after that. But what you can basically do is look at the last year's grid. It's going to go up by 2.1%. And then, of course, as most priests move one box to the left or to the right, it'll go up another percent, 1.2 or so. Housing, of course, we basically do not have any clergy that I'm aware of living in a rectory. So everyone is utilizing housing allowances. And so we use average rental costs for a 3 or 4 bedroom house with a garage and utilities. And again, the housing allowance moves each year based upon the CPI factor for the increase of the cost of housing. And this, by the way, it does not reflect capital cost changes. This reflects rental changes. So the cost of housing in the province of Ontario, according to StatsCan, has moved 2.8%. So the 2021 housing allowance is proposed at $27,040. So that's about a $700 increase over 2020. Mileage is based on the cost of operating, maintaining, and the capital cost depreciation for a mid full-size vehicle. For 2021, the reimbursement rates will remain unchanged. Is what's going to go to council. First 18,000 kilometers is 61 cents, and that is slightly above the Revenue Canada number. And then beyond that, it's 41 cents beyond 18,000 kilometers, and that's below the RevCan number. So we've held this flat for the last several years, and that holds within the guidance from the CRA. I just got this information. I was still finishing the chart as folks were joining the call, because I just got this information from the national office just over an hour ago. So good news in most cases, the pension and LTD costs, the pension and long-term debt or long-term disability, those rates will remain flat. The only thing to note there is that those rates are based on stipend, and in some cases stipend plus housing. So the benefits will go up with stipend and housing. So the rates themselves will not change, but as the stipend and housing allowance goes up, some of those pension and LTD will move with it. Life insurance rates, this is the part that is the part of the package. It's funded by the parish, will hold flat, and that's calculated on dollars per thousand. So again, there'll be a slight increase there as the rates stay the same, but the stipend goes up a bit. Extended health, I was a little surprised, is actually going down very slightly. And down very slightly refers to the monthly rate for single going from 125.59 to 124.33. So, you know, you're talking about a $1.26. The married or family rate goes from 323.49 down to 320.25. So about $3.24 difference. So very slight decreases, but that always beats a slight increase. Dental costs will remain flat year over year. A couple of years ago, it was announced that Con Ed, continuing education, was going to be increasing it over 3 years. It was doubled from $450 to $900, and we are now entering the third year. So 2 years ago, it was $450. It went up to $600 last year. It went up to $750 in 2020, and in 2021 it will increase to $900, another $150, and then it's anticipated it will stay there for some time. Con Ed had not changed from the $450 for many years prior. So that's what the clergy benefits look like. Again, the effect of Con Ed, but the rest of it will simply be driven by increases in stipend and housing. So the second and third biggest expenses in a church are building and CMM. So we're going to focus for a moment on building, and the diocesan element of that is insurance. I can tell you I've spent a fair bit of time recently working this through. The diocese participates in the National Church Program. We're one of a number of dioceses that participate in this program. It is through Aon as the broker, as the service provider, and ecclesiastical is the primary underwriter for all of this. Northbridge underwrites the boiler and that end of it, but the bulk of it's with ecclesiastical. There is a good reason for that, is that ecclesiastical was set up and owned by the Church of England to insure churches. And it started within the UK and grew out from there. But one of the elements there is that Ecclesiastical is also one of the few organizations that will insure faith-based organizations. And faith-based having a number of components to it. Number one is there is higher risk on buildings because most of our buildings are older. Most of our buildings do not have, for example, some of the same fire rating protection and prevention and alarm systems or sprinkler systems that would otherwise exist. Some of our churches exist in remote areas. It's one thing to say remote in the Diocese of Ontario. It's something different to say remote in the Church of the North. That drives responsiveness time for firefighting. It drives cost, a whole lot of things. Churches have unique liability exposures, such as some we've seen in this diocese a number of times with abuse cases. And again, Ecclesiastical is willing to underwrite that. And one of the other dioceses in the province does not currently deal with Ecclesiastical. However, they've been informed by their underwriter that effective the year after next, they will be exiting the support that they will underwrite churches. So what we're seeing is the number of insurers reduce. And that's not good news. The second piece for us is that we have the deductible reduction program. And as you know, there was a review a year ago that went through Synod Council on our insurance. And that program reduces the policy deductibles by 80%. And the policy deductibles are either, some cases they're zero, in some cases they're 2,500, some cases they're 25,000. This fund, we use a fund in the diocese that basically pays churches back 80% of their deductible. What's done to fund that is that we take everything we pay out in 2020, and in 2021, that fund will be replenished and that's shared out through the insurance billings. That shows as a specific line item on the insurance invoice you get from us. The other thing that changed last year was that the invoicing for insurance was based upon pooling all of the diocesan property, everything, all churches, and then billing out the total premium, about $250,000, based upon each church's share or percentage of the total replacement cost. And what that did was it, at one time that was easy to calculate, was much more straightforward. But what it did was it meant that the churches with the higher values were paying higher amounts of insurance because they were carrying a heavier load of liability. Liability insurance in the diocese is the same premium for every single church, whether you're the smallest and lowest replacement cost church or whether you're the largest and the largest replacement cost. Across the diocese, that was all schmeared. Last year, we adjusted that. And what we did was created to go to the actual invoice amount. And then for churches that saw a major change because of it, for the lower cost, the lower replacement cost churches, they got a transition benefit, and the more expensive ones paid into a fund. So here's the way quickly that was done. So in 2020, if the increase on the baseline Aon premium, if the church was seeing more than $500 because of this change in the way we allocated, or 25%, then that church qualified for a subsidy. And the subsidy was half of the increase. The largest increase, for information, was $1,000. The subsidization funding came from 10 churches with the largest savings, and they contributed a quarter of their reduction. And the minimum amount of savings from those churches was $1,500. So the result of it for 2019 was that there were 85 properties insured across the diocese. 31 received subsidies. The minimum one was 90. The maximum was 488, and the average was $229. 10 churches paid into the subsidy. The minimum was $391, the maximum $1747, the average $700. And so that created a program that helped the smaller churches, and mostly the ones with the lower replacement cost, in that transition. At a recent Synod Council meeting, Council approved a second year for the transition subsidy, and it will be 50% of what it was in the prior year. So the churches that received the subsidy on their insurance bill in 2020 will receive half of that same amount in 2021. Churches that were charged it on their insurance bill will be charged half of that in 2021. And that'll be the last year of the subsidy. In 2022, we'll have completed the transition. So I mentioned that there's, our insurance breaks down into two key areas. Property, which includes the building and so protection from fire and all the property things, flooding and earthquake, from crime, etc. So those are things relating to the building. And then liability, and that's the umbrella liability that protects officers. So wardens and those holding office have what's called D&O, director liability insurance. Abuse claims, and sadly we still deal with those cases where something inappropriate has happened. And of course, cybercrime, which is a new set of challenges. There's a lot of influences on premiums in a year. The global insurance market, and that market right now is very tight, and relates to how many will take churches. Financial markets, in terms of the insurance companies, have a lot of money invested, and of course they're invested and they're not always getting great returns. When there's been major events, things that we hear in the news that will cause major payouts for insurance companies. There's a lot of things right now that in the US in particular, there is not clarity on how COVID will affect insurance. So there's a lot of uncertainty there with the insurance companies. There's inflation, as each year the cost of replacing buildings goes up. There's regulatory changes as governments work their way through. There's experience with claims. So they look at, just like your home insurance and your car insurance, they look at the history of claims. And then finally, there's the dynamics of faith organizations. So we're still working with ecclesiastical, and this will not be final till January. And Aon is still negotiating with ecclesiastical. But from the discussion with Aon, and I underline the bold print of preliminary, general guidance on what to expect. In 2020, we had, as you may recall, on property, we had a 0% rate change. The cost of property insurance went up because the inflation on the replacement cost, but the actual rate applied to the replacement cost, that change was zero. And that was because of part of the policy as a long-term agreement in it, long-term rate agreement in it, and we had a favorable loss ratio in 2019. Unfortunately, in 2020, we do not have a favorable loss ratio, so the long-term rate agreement will not apply next year. So what does that mean? Well, what we know is that there will be a 3% inflation on replacement costs. And of course, the way that the premium is calculated, take your replacement cost, multiply it by the rate, and that tells you what your property insurance rate is. So the replacement costs will go up by 3% for inflation. The current guidance from Aon is that the property rates are going to go up 20%. And that is obviously a major impact, but a 20% increase in the rate on property insurance. The other thing that they've not given us any detail on is that earthquake zone ratings are changing, and I don't expect that's going to impact this, but can't be sure. but that they're looking, because of claims history, at deductible changes on earthquake, which I don't think is a big issue for us, but flood and sewer backup have been major. The bulk of the insurance claims in this diocese are around flooding and sewer backups, and then roofs. So there looks like there will be deductible increases there. Boilers and machinery will go up 0. So that's the good news. So just again, and I'm careful about averages because no church is average. But if I look at what these costs look like based upon the average replacement cost, the premium because of the replacement cost will go up about $40. The rate increase, that 20%, will drive about $280 additional cost for insurance premiums next year. That's on property. Liability, as I mentioned, is a flat amount. It is all churches pay the same. The major components, commercial general liability, it's basically going up $50. Directors and officers liability insurance will go up about 15%. Crime, about 5%. And abuse, 12.9, which again, it'll be about $50 per certificate. So that means that every church's liability insurance will go up $125 next year. So again, based on preliminary guidance and averages, right? So I'll repeat that. Preliminary guidance and using arithmetic averages. The average total Aon increase invoice will increase about $450. That's for a church that sits around $900,000. We have churches that sit at a quarter or less of that. We have churches that sit at 15 times that. So what you can see is there'll be a wide variability. It's going to vary depending upon the property and contents value. And of course, the final on this, we won't know until Aon issues us our invoice and the certificates, et cetera, in January. And as we did last year, you will get your Aon documentation with the full invoicing along with the parts that relate to the diocesan side. So the insurance is going to have a reasonably significant updraft next year. CMM, as I mentioned, CMM is set at Synod, so it'll remain 20% for next year. It has been 20% for a number of years. Once upon a time was 25%, but that was really 20 plus 5 for clergy benefits. The CMM weight of 20 has been the same for a very long time. The actual amount for your church is calculated based on your 2019 green sheet. So you take the 2019 financial report, fill out the green sheet. Candace works all of that through, works it back with you, and you get your approved green sheet back. And that tells you as well, by taking that green sheet amount of assessable income, multiplying it by 20%, and you know how much your CMM next year is. We've been working hard this year to get green sheets done early. So most churches have their green sheets back. If you don't, it's because either Candace Can you hear me now? Anybody hear me?
Now I can. I couldn't for about 2 minutes.
Yeah, I
Right.
couldn't hear you, but I can now.
Okay, not sure what happened. I just clicked something and it came back. So despite the flexibility in the markets and the flux, we believe we can sustain 5% next year. So you can budget for 5%, 1.25% per quarter. The other thing to mention is we are implementing new software. And so it won't affect your quarterly payment, other than the fact you should get a little better statement, a little better accuracy on or a little better detail on your statement. But what it will change is when you put money in or take money out. So rather than getting nothing in the quarter that you put in and a full quarter when you take it out, you'll actually receive for that quarter the daily interest rate. So for however many days, you'll receive full amount. So that'll be with the implementation of our new system. We're paralleling it in December or in fourth quarter, and then implementing, kicking over to it the first of the year. This has been a major thing for our auditors in terms of from their perspective, how we manage our funds. So a few final items. The letter with the details, well, as it always comes each year, that'll come in the next couple of weeks. Senate Council will approve, hopefully, the grids and the rates next week. We'll continue to work on insurance. As I mentioned, that's still, I don't expect major change, but we're looking to get whatever we can. The pandemic financial response team will continue their work. The investment fund, we continue to work through our management tools there. And then we're looking with more and more web services. So we're looking for your account. You know, our goal is to get so you can go online and look at your parish account so that the payments methods, money moving back and forth between churches and the diocese, that we can continue to do more electronically. And that ultimately those services will support us to try and support churches in their bookkeeping better. And then finally, communications, dialogue, and collaboration amongst all of us to continue as we've been doing since, I guess, since March, really in a different level through the pandemic. And with that, I want to say thank you for sitting for the last hour, absorbing all of that. As I mentioned, the charts will be up on the diocesan webpage, hopefully tomorrow, along with this recording. And with that, we will move to the Q&A. And a lot of people I know lost sound along the way. So hopefully it that came back and we caught it all. You can either, as always, ask questions by coming on and asking the question, or by going on the chat. And Laura is online and will moderate the So questions. Wow, somehow I doubt that I was that clear, articulate, and complete. Of course, questions, of course, asking, covering the whole piece. The bishop's opening space around the COVID guidelines, the 2020, 2021, or the parish guidelines. Fair game on any of them. Laura, any questions on the web?
There are no questions in the chat.
Okay then.
Alex, I have a question.
Sure. Go ahead, Jay.
It's just a quick one. Somehow our form didn't get submitted on time. If we submit it tomorrow, is that within the window?
On the Sue's?
Yeah.
Yeah, there's still a couple of churches. Yep, get her in tomorrow and you're good.
All right. Thanks very much.
Could we ask, Jerry Quick to be muted?
Sorry?
Could we ask Jerry Quick to unmute it? There's a lot being brought into the conversation, just with background noise. Thank you.
Any other questions? Laura, last call on the chat.
Yes, there is one. There was a preliminary meeting at Christchurch Cataraqui regarding possible transferring some CMM funds to the GFD Canada. Any update on that?
Right, so that is, and of course, just so nobody gets confused, that's C&M, right? Care and maintenance. And so we are looking at, we had conversation with a group that had proposed, called GFD, that had proposed that they were acceptable to the Bereavement Authority of Ontario as an investment option. As you know, the legislation and regulations restrict cemetery care and maintenance funds being invested in things that are basically blue ribbon. Those are basically low risk and therefore low return. This group has presented a case that they can get better returns. To be honest on that one, Randall, I'm waiting for, I need to go back to my BAO guy. They too got distracted to find out he has not confirmed that GFD is approved from their perspective. So I will go back and follow up with Michael and see if he'll give me that.
Alex, will each church receive direction on their specific insurance requirements for 2020 and 2021?
So what you'll get is the normal process is you'll receive in your invoicing what Aon's bill is, and then what the pieces that get added on to that are. The transition program, the deductible reduction, etc. That'll all come early in the new year. One of the things that I'm encouraging churches to do now is to take a look at their existing 2020 documents, look at the replacement costs, and satisfy yourselves that you're comfortable with that level of insurance. And I speak to that. I mean, I mention that every year, but this year we've had a specific case where we had a fire that completely destroyed St. James Parham. And so now you actually have the experience of a full claim. We're not talking about fixing a roof or a flooded basement. We're talking about, a complete loss of a building. And that you gain a ton from in terms of experience. And so it is work we are doing now, and we will continue next year to work with Aon and then church leadership to look at, is the replacement cost appropriate? So for example, if your building was a complete write-off, is there sufficient money there to replace it? And that's a key question. On the other end of it, we also know in some cases that we have large churches that were built 100 plus years ago that we would, and no longer make any sense to build that size of a building, that we would probably go and build a multi-purpose flexible space that would have a whole different profile and a different cost structure. And yet we're paying based upon full replacement. I'm chairing a group within the ecclesiastical province that's looking at an option ecclesiastical is open to, where we would agree that we would say, look, if that church burned down, we would pick a model that says we would build a 2,500 square foot that looks like this. And the only way ecclesiastical will allow you to do that is if you have a set of drawings and you've had it costed, so they know what the money they're putting on the table is. So we're actually going to go and work together, the executive officers across the province, to work with ecclesiastical to get a program that could see us reduce costs for some churches, because we're paying for insurance we might never fully utilize. On the other hand, if your coverage doesn't replace your church, there's a different problem. So one of the things we'll be doing early in the year is really working with you to understand those pieces. And as several churches have done, you can then go through a reappraisal exercise to help ecclesiastical adjust the replacement cost, recognizing that when the replacement cost goes up, so does your premium. Long-winded answer, but we are continuing to work this through. Insurance is a large cost for all churches, and it's going to continue to rise. I also had a question, I think it was just to me, around our supply rates and interims and all that stuff. And that will go to council next week. Normally they adjust as by the same factors, but council would approve a motion next week that would also set the rates for Sunday supply, for the administrative and pastoral work and mileage for interims.
Alex, I have two fast questions. One is the question about stained glass windows. Do we have to go out of our way to get extra insurance in case somebody throws a rock through a stained glass window?
So there's a couple of different pieces to it. One is if your church is destroyed or a complete write-off, your stained glass windows become part of the overall replacement cost. And just a quick, I was given a great way to say, well, what's contents versus what's building? And, so you get asked the question, well, what about the organ? Some of our churches have very expensive organs. So is that covered under contents, or is that covered under the building insurance? The way it was told to me is if you visualize taking the roof off your church, turning it upside down and shaking it out, anything that falls out is contents. Anything that stays attached to the building is contents, is building. So pews and those things would normally and would all be part of the building, versus an organ, books, all the things that are inside the church would all be contents. So again, just a guideline there. But we will be working through next to get that down to everyone, so you can make a better assessment. Do you have an appropriate replacement cost? Do you have an appropriate content amount? And then what are your options? So we'll continue to work that through next year.
Well, last really quick one. I think I sent a note to you, but perhaps I didn't. We have a couple of clowns that like to skateboard on our church steps, and we have to kind of shoo them away now and then. If they break their leg, are we liable?
That's always an interesting one. The first line you have to cross is whether the church has taken the appropriate steps to ensure. So if there's a hazard there that is clearly a hazard that a reasonable person would recognize as a hazard, then you would be viewed as being negligent and not protecting anyone that's on your property from that hazard. The other thing is there will be things like, have you placed notice that their skateboarding is not permitted? For example, there's a number of churches that in their parking lots have signs that say skateboarding is not permitted. So those are the steps you would need to say that says, we have taken care that there is nothing that is a complete danger, and that we have also made it clear that that's not a stated approved use of our property. If you then decide to skate across and they do whatever they call that, they grind across the stair, and they fall and break their leg, then at that point, the church should not be liable.
Good. Thank you.
But again, very rarely are things black and white. There's always shades of gray. Okay, unless Laura, have you got any other?
No, there are no more questions in the chat.
Okay then, well, let's turn back, please, Bishop, to you for.
Thanks, Alex. Close again, just in closing, again, thank you all so much for your attention today, but also, Alex, thank you so much for the work that you're doing on this, together with the finance team here in the office and the finance committee, and the work that you'll be bringing to Synod Council. It's no small effort, and it's deeply appreciated. So thank you for the presentation today, and a lot, like I say, a lot of material, but it's great to be able to get this disseminated out to our leaders within the parishes. So again, thanks. And as we close today, let us close with the grace. The grace of our Lord Jesus Christ, and the love of God, and the fellowship of the Holy Spirit be with us all evermore. Amen. Thank you very much, everyone. Blessings, and take care and stay safe.
Thanks, folks.
Bye, everybody.